The news first came in over the loudspeaker at the Long Beach Expo on September 24, 2010. The price of gold hit $1,300 an ounce, a new all-time high. As often happens during uncertain economic times, many investors turn to gold to protect their assets. So how does the rising price of gold affect the coin market? We caught up with 3 prominent numismatists and investors to gain their insights on how today's gold prices affect the coin market, both in terms of rare coins and bullion coins. Nobody knows what will happen for sure, but Steve Deeds, Gary Atkins, and Van Simmons certainly provide plenty of food for thought. Enjoy.
Here we are at the Long Beach Coin Show. I'm with Steve Deeds, president of Morgan Gold. Hi Steve, how you doing?
Good.
Thanks for taking a minute with us.
My pleasure.
You know, I know Morgan Gold sells an awful lot of gold to customers out there across the country and so forth. What does it mean now with the price of gold? It keeps going up every day. We just crested $1,300 an ounce.
Today, $1,300 for the first time ever.
Right. Do you see an increased demand as gold goes up, or?
Definitely, and there's more of a sense of urgency right now. People are looking around. They're looking at the debt clock, $13 trillion.
Yeah.
I mean, most people just can't imagine what $1 trillion is. But $1 trillion is, what is it, $1 million billion dollars. I mean, it's an ungodly amount of money, and the government just, they're running their presses day and night, printing $100 bills.
Right. So, the run-up that we've seen in gold, where do you think it's going to end? What's your forecast? You have a forecast?
I don't think it's going to end anytime in the near future. We have several years of advances in front of us, several years. We have outside sources outside the United States that are buying physical gold and taking delivery off the COMEX. They're taking this gold away and storing it in Zurich. Zurich's vaults are bulging.
What are the most popular forms of gold that people are buying from Morgan Gold right now?
They're buying $20 Liberties, $20 St. Gaudens. They're pre-1933 coins. They're not non-confiscatable. People feel comfortable with them. And of course, the ones that want to stay closer to the bullion price are buying the American Eagles and the American Buffaloes.
Right. How liquid do you think these investments are in future times?
Well,
it's going to be difficult for people to sell their
coins graded by PCGS, these $20 Saints and $20 Libs, they're fungible. Yeah. Someone in Colorado can call somebody in Florida and say, I have 20 MS63 PCGS Saints. Well, what do you give me for them? Boom.
Right.
They'll give them a number. PCGS has made them fungible. The gold market has its adversaries. The U.S. government is against it.
Right.
There are going to be fluctuations, okay? There's going to be peaks and valleys, okay? But the demand is there, undeniable, and the demand is increasing all the time. It's a good alternative.
Yeah.
Don't put your whole boat in it, okay?
Yeah.
Take 15 to 25%, okay? Buy some gold, put it away, forget about it. Don't watch it on a daily basis, okay? People that watch the stock market on a daily basis have heart problems, okay? This is to protect you and your family, just in case.
We heard today that the price of gold for the first time exceeded $1,300. What's your take on that?
I heard that also. In fact, they've been blaring it over the loudspeakers. I think the world's in a position where people ask, is the price of gold going to stop? I don't think the price of gold is necessarily going to stop, and I'm not saying it's not going to pull back from here. But I don't think the price of gold is really going to stop until we have some fiscal responsibility by the people who run the country, our politicians, and not just the U.S. people, but around the world. They're creating trillions of dollars out of thin air. So I don't see the price of gold being any big shock where it is today. In fact, it's one of the major bull markets of the last decade, and Wall Street or nobody else is paying any attention to it whatsoever.
So how do you think this ties in with the rare coin market today?
Pretty strongly. It's interesting. Rare coins really haven't done anything in comparison to the price of gold. There's been other collectibles that have. The rare art market is hitting historic highs. Tiffany lamps and things like that are soaring in price. People have sort of overlooked the rare coin market. Historically, coins usually follow the bullion market pretty closely. But I think the deflationary pressures that we've seen over the last 12 to 24 months are one of the things that's taken the attention away from coins. To me, they're one of the most underpriced collectibles out there as far as value.
The high-end coins are still strong these days, is that
Pretty
correct?
strong, pretty short supply. It depends on what you're talking about. If you're talking about common date MS65 St. Gaudens and stuff, those are relatively available. But when you move into other things, I mean, at PCGS, I think we've graded, if you took the St. Gaudens from 1907 to 1933, we've graded a little over, I want to say a little over 110,000 of them, and they're around $2,200, $2,300 a coin. You can buy an MS65 20 Liberty for, let's say, $4,500 or $4,300 or something. And we've graded a little over 5,000 of those. So you essentially have a coin that's about 20 times rarer, trading at double the price. So, you know, I think there's other values on coins that are being affected by the bullion market, and some that have been overlooked pretty dramatically. And coins are a good asset because nobody's making any money in the banks now, and they're looking for someplace else to put their money. So people are willing to say, you know, let me take some money out of the bank and buy a piece of art or buy a coin, buy something like that, because it gives them something that they can look at and enjoy, and there's no loss of interest on the money. You know, there is market risk, but I don't see much market risk at current prices.
Hi, we're at the Long Beach Coin Show. I'm here with Gary Atkins, president of Gary Atkins, Inc. Hey, Gary, thanks for joining us.
Yeah, my pleasure.
Hey, I understand you won a great award this year. Tell us about it.
Well, I was honored at the Boston American Numismatic Association convention, and I was quite surprised and pleased to find out that I won the Harry J. Foreman Dealer of the Year award.
That's quite an honor.
Quite an honor, yeah, when you consider there's thousands of dealers around the country, and so I was very humbled by that experience.
What do you see happening in the market right now that makes you happy and makes you concerned?
Well, I think as far as making me happy, I like the fact that the gold and silver markets are continuing to rise. I think that's on the positive side, that's a great thing for people who purchase gold, especially collectible gold coins and silver coins. And I think that we're headed for probably some major inflation and probably some hyperinflation. And in that kind of a scenario, rare coins and precious metals always do fabulous. So I think that's a great thing, and as far as that is concerned. The downside of that is that our economy's in a shambles.
Right.
And if collectors and investors have done anything over the past, say, 8 or 10 years and bought coins, bought rare coins, bought precious metals, they're valued.